Morning, everybody. This is Greg Michalowski from FXDD, and this is Wednesday, March 10, 2010, opening New York Forex report. I remind everybody that trading Forex is risky. You should only be done with risk capital, not change your lifestyle. Traders could lose all their risk capital. Trading Forex, FXD does not guarantee any recommendations made within this commentary. Traders should make market assessments, take trading positions based on their own personal market analysis. Risk tolerance and financial condition, in addition, care should be made to only use leverage which is congruent with your personal risk tolerance, although care is taken in creating the support. FXD does not guarantee the accuracy of the information. With that said, the market just got off to a rousing start here, and it's really New York is just coming in at 6:59 in the morning. The euro just surged to the upside in the last half hour or so. There was a report out of the U.S. Or out of the EU, out of Greece and the EU, saying that the implementation of the deficit plan was ahead of schedule. That gave the euro a goose to the upside here, and we broke through some the 100 and the 200 bar moving average on this 5-minute chart in the process. You can see earlier in the day the market was under more pressure here. German exports slumped, and this caused the euro to have some moves to the downside here. But if we go back to the hourly chart, let's take a look at the hourly chart. We can see that this area right here, the 61.8% retracement of the move up, the recent move higher. We have to go back to actually, this is like the 2-week range, or actually the 3-week range now. This is a 15th day. 3-week range of the low to high range would take the euro down to 134.37 up to 137.35. That 3-week trading range had the 61.8% retracement at the 135.51 level, and that's where the market seemed to find its support once again. Yesterday it did move below that. The day before, or 2 days before, it moved below that level, but each of the time the market has rebounded off of that level, and today was no exception. This day it actually came right down to it. Today, we are currently, at the moment, we are back above these two moving averages. You can see how the market held that 200-hour moving average. We talked about this in the report last night, in our webinar last night, which will be available at forex.fxdd.com. If you click on the webinar tab, but you can see that the market has moved back above those two moving averages. And let's zoom in here and take a closer look at the hourly chart. The 100-hour moving average comes in at 136.13. The 200 comes in at 136.09. In the quick early trade this morning, if we could see the support develop against these two levels, we should see higher movements. And on the top side, we have resistance at 136.54. These levels are becoming, everyone should be saying them in their sleep at this point. 136.54. If you go back in time, there's a lot of different lows and highs that stopped at that 136.54. You can see them along the way, on the way here. 1, 2, down the road. And the other key level is 136.91. Just in recent times, we had a floor here, we had a ceiling here, we had a ceiling here, we had a ceiling here before the market started to move down. So those would be targets on the top side. Let's look for support against this 136.08 or in early trading, and lo and behold, the you can look at the 5-minute chart as well. And during the last night, for most of the Tokyo session or Far East session, in fact, this is a whole Far East session basically in this nutshell right here. It's a very narrow range. We had highs around 136.05, so look for support down there at 136.05, 08, or whatever. And if that holds, boom, we should head up to. We should see a move up to 54. If it doesn't, then we're back. We're going to be heading back down toward testing these two moving averages down here, the 100 and the 200 bar moving average on the downside. Let's go to sterling versus U.S. dollar next. And on a daily basis, what is significant is the market got pressured again here today, and we went down to a low of 148. 148.71, and the market has rebounded, currently trading at 149.32. This 61.8% retracement of the move up from this 2009 low price to the 2009 high price comes in at 148.54, and once again the market did move down to a 148.71 and found some support against that level in the sterling versus U.S. dollar. And just like the euro, we've seen this market bounce back in the last hour or so in that currency pair. Nice spike up to the upside. And if you take a look at the Fibonacci on the shorter term chart, of the range from this low, which occurred on March 1st, to the high that occurred on March 8th. We do have the 61.8% retracement of 49.39. We did break through that level and then started to move to the downside. So it is going to be a key level. You can see it here as well. Yesterday we had support against that. Today we had initial when it broke through it, we saw the move to the downside, some resistance. So that's going to be a key level to watch here today for the sterling versus U.S. dollar. Let's go to the five-minute chart, and you can see this 39 level. I put a line in here at the chart when the market broke through. We used it as resistance here. The market just fell, came down, came back up to that level, to that low that we saw here from yesterday, and then started to move to the downside. We moved back above, used the 100 bars, moving average as support, and now we're back up. Let's watch this 34. Let's watch this 39 level. Current price trading 31, a little bit below. So sterling's having a little bit more difficult time than the euro. We'll be watching that closely. Let's go to the Japanese yen, and well, let's go back to the daily chart. Yesterday we went below the 100-day moving average. Today we moved back above it. 90.14 is that key level. Could happen. You know, we just got to use that as our pivot. So let's go to the hourly chart. We have the line in at 90.14. You can see how the market went up to that 14 level, came down, and then when it broke through, we saw the momentum to the upside, up to the high. That took the price up to around the 47 level. We do have resistance up at the 2-day high at 90.67, but we're back a positive for the dollar versus yen after the move to the downside yesterday. Got back above that 14 level and moved back higher in that currency pair. Taking a look at the 5-minute chart, you can see how the market it was respecting the 100-bar moving average, came up to the 15 level. You know, it sees that resistance, and you often get this type of move where the market says, okay, it held the resistance. I'm going to come back down, go to the 100, go to the 200, have this one little, kind of looks like the middle finger, doesn't it? Gives a market a little bit of a pause down here, and then it starts its move back up to the upside here. And up to the 90.48 level, which was the high that we saw here a couple days ago at 90.48. So I'm not surprised it stopped at that level as well. Let's go to the dollar Canada. We are seeing oil prices up about 37 cents, and the dollar Canada had an initial surge to the upside, got to the 100-bar moving average, got to the top side of this channel. I'll show you this channel here a little more closely. You can see this top, the bottoms fit nicely. The top's kind of a rough channel here. I just drew in here, but lo and behold, it did come up to the top side of that channel, which is just above the 100-hour moving average at 102.85. This top channel came in at 102.90. The market found sellers against that level, or disappointment up there. I noticed how we couldn't close above the 100-hour moving average, and the market started to come back down toward our key support level, 102.59. 102.59 has held this lows here over these last few days. The market moved below that level, currently trading 102.56. So we're going to have to watch. We're at a key level here for the dollar versus Canada. We'll be watching that very closely. Take a look at the 5-minute chart for that currency pair. We are back below. Lots of up and down action here in the dollar versus Canada. It's almost worth just trading off of this 102.59 area, off of these key areas, off the hourly chart, than it is off the 5-minute chart. The 5-minute chart is a lot of up and down action. The two moving averages are moving sideways to whatever, I just like this chart better. It's setting up nicer. Australia versus the U.S. dollar got some better news out of China. Their trade data pointed to increase, much higher increase in exports and imports. This should translate into higher growth in Australia, and that's what we saw here. Is the Australia versus U.S. dollar kind of just move a little bit higher again, but up and down action here in the currency pair, but it is moving, going back to the daily chart, to the highest level since going back to this day, January 20th. So the market is on its moving back above the 100-day moving average on this daily chart. We do have resistance up here at the 91.71 level for that currency pair, and the market moved up toward that level. Taking a look at the 5-minute chart, uh, um, we did dip below the 200 bar moving average. The last time it came down, we just tested the 200. I guess we can draw a trend line here off these tops here. It's kind of a we're not really having a lot of momentum to the upside, but we are seeing some momentum. That's my morning report. Let's watch this level right here, 90.54 to give you clues. Have a great day. Good luck with your trading.